Gold's dead money. Sell your gold. Buy Bitcoin because other people are going to sell their gold. And if you wait until you've been front run by all the hedge funds, when they dump their gold, you're going to be the last person out. The gold standard's been dying a slow death. I think Bitcoin is the first digital money. I mean, it's the first digital money. Gold wasn't digital money, and fiat's not digital money. In 12 months, Bitcoin is up 240%. Gold is down 9.82%. Over the course of 10 years, Bitcoin is up 132%, compounded annual growth rate. Gold is 94 basis points. Gold is not a store of value in the last decade. It's something opposite of a store of value. Mm-hmm. The fundamental problem with the gold standard is the custody is difficult, and the security is hyper expensive. And by hyper expensive, it's, how much does it cost to secure $1 billion worth of this stuff? The cost, you would say if there's a small amount of it, it's impossible to secure. And if there's a large amount of it, it's expensive, exponentially expensive to secure. Mm. And the security cost scales in some ways exponentially with the amount you have. Gold's dead money. Sell your gold. Buy Bitcoin because other people are going to sell their gold. And if you wait until you've been front run by all the hedge funds, when they dump their gold, you're going to be the last person out. I think gold's getting demonetized. That is, like being demagnetized. It's like there's $10 trillion worth of monetary energy in gold right now. Eventually, it'll only be the central banks that'll want to hold it. Every private rational actor is going to move out of it and move into Bitcoin. If I wanted to move $1 billion of gold every day of the week for 365 days in a row, 1,000 miles, figure out the security cost of that, right? The conclusion is this money is so heavy, it has no velocity.
Right.
It goes into Fort Knox, it sits there for 30 years and nobody audits it. Gold had a slight bounce up, but look at every asset class for the last 6 months. Look at gold, look at NASDAQ, look at S&P, look at bonds. They're all chopping. They're not going anywhere. What's working? Bitcoin's working. It's tripled or quadrupled, but let's say tripled easy. Square is working because Square plugged into Bitcoin's network. Square lets you buy Bitcoin on a mobile app. PayPal's working because PayPal's plugged into Bitcoin. It runs on a mobile app. Grayscale is working because they plug their mutual fund or their investment fund into Bitcoin. Things that are plugging into this digital monetary network are working. Things that are running on top of traditional fiat, euros and dollars, they're chopping. And then, of course, if you're unlucky enough to have companies or investments in Venezuela, Argentina, Lebanon, Turkey, South Africa, fill in the blank, they're not working at all because the currencies are collapsing. And no company can be successful, no matter how competitive it is, if it's generating revenues in a currency which is collapsing or weakening. And so that means none of those stocks are going to be a store of value if their currencies don't hold value. You're swimming against a 15% annual monetary inflation current, which is in your face. It's a wind blowing in your face right now. Of course, the highest form of money is the gold. So let's say it's called the gold standard. But what's the problem with the gold standard? There's inflation. Inflation's a nagging defect. It doesn't inflate fast. It's like it inflates slow, but it inflates at 2 or 3% a year. And because it's inflating, because you're mining more gold and you're striking more coins or whatever it is you're moving around, it's not conservative. And by that, I mean, it's not mathematically conservative, or it's not conservative from a scientific point of view. You start with 100 units, and then you've got 102 units, and then 105 units, and 108 units. So whatever percentage of the gold supply you have is leaking at 2 to 3% a year. Crypto is the steel of the 21st century financial economy. An engineer would say you have to choose wisely. There's a right answer. There's a wrong answer. So gold is element 79. It's an ideal ornamental metal. It's indestructible, malleable, it's attractive. We love these things. It makes great jewelry. It makes a great ornament. It's just not a perfect monetary asset because you can inflate gold, you can confiscate gold. It's immobile, it's not easily divisible, and you can counterfeit it. It shows up in the economy in a heterogeneous fashion. Lots of different types of gold coins, lots of different types of gold bars, lots of different types of gold jewelry. And the paper gold itself is sometimes trading at 100 to 1 versus the underlying physical gold, and there's no trusted protocol to guarantee the integrity or the synchronicity between paper gold and actual gold. If we compare that to Bitcoin, Bitcoin is not just an asset, it's a network and it's a protocol. People would say it's the world's first global self-settled real-time clearing bearer instrument. It fails because the base layer protocol is okay. It's kind of God-given by nature. It's the creation and the smelting of gold. It's okay, but it's not conservative. The application level protocol, the one layer above the base layer, the layer 2, the application protocol is difficult and dangerous. What can you do with, how many people do you know that can actually refine or melt down molten gold and create something with it? That's the dangerous part and the difficult part. So gold applications, they're difficult and they're limited by the laws of physics. In 12 months, Bitcoin is up 240%. Gold is down 9.82%. Over the course of 10 years, Bitcoin is up 132% compounded annual growth rate. Gold is 94 basis points. The S&P index is 13.9% over 10 years, 33% over 1 year. And summary, right, is gold is not a store of value in the last decade, and gold is minus 40%, and Bitcoin is plus 200%. That's the marketplace screaming at you that no one really sees gold as a monetary asset anymore, except for the gold bugs. And why is it a paradigm shift? Well, because I think Bitcoin is the first digital money. I mean, it's the first digital money. Gold wasn't digital money, and fiat's not digital money either. It's decentralized, permissionless, global, immutable, scarce, auditable, instantly transferable, not seizable, highly divisible, mostly everything that gold can't do. The asset itself, secure, easily divisible, it's deflationary. People might lose some Bitcoin. They're never going to add more than 21 million. You can transfer it around the planet. It's transparent to everybody running a node. You can authenticate it instantly from a $100 smartphone. Makes it the perfected monetary asset of the human race. We've never actually had an asset that clean. It's synthetic gold without the defects of monetary gold.